coming out of the China stimulus market, where we know that China is one of the biggest commodities consumer in the world across all precious metal and as well as the industrial metals. And as a result, the US Treasury yields slip in the choppy trading as the US data, including the weak confidence numbers, nudge up the possibility that the Fed could do another outsized rate cut by 50 basis points in the next November policy meeting. And as a result, the US rate futures have priced in another 62% chance from a 54% chance on Monday for a 50 basis point cut, and benchmark 10-year yield was slightly down towards 3.73, down by almost 8 basis points. And China Central Bank unveiled a broad package of monetary stimulus measures to revive the world's second largest economy, underscoring mounting alarm within Xi Jinping government over slowing growth and depressed investor confidence. Moving on towards the other Asian parts, we are seeing Japan's factory activity ease in September due to softer productions, and it's mainly due to the automobile sector, although further expansions is still existing in the service sector, supporting the overall business momentum. As well as we are seeing that Governor Kazuo Ueda reinforced his message that while the Bank of Japan will raise interest rates again if data allowed, authorities won't be in a hurry to do so in remarks that there will be little chances of a move in the next meeting. And Australia's stock market, Australia's central bank are signaling they will be keeping the interest rates at 4.35% at a 12-year high after we are seeing that they are still struggling with their high inflation compared to the other global counterparts. Moving on to the euro side, we are having the Germany's business outlook worsen again, reinforcing that the Europe's biggest economy is in a recession and with no quick rebound in their economy soon. And as a result, the currency side, we are seeing that the dollar index fell by 0.57% after the release of the consumer confidence data, with the euro up by 0.6%, and against the Japanese yen, the dollar weakened by 0.3%. And moving alongside to the commodities news, we are seeing that oil prices climb on hopes of a stronger Chinese economy after the release of the stimulus package. And there is a major strike Israeli on Hezbollah targets in Lebanon that really kept tensions high in the Middle East. And gold, as a result, trading above 2,662, reaching all-time high records as traders digested data from the weak consumer confidence data and the remarks from policymakers while awaiting a slew of key economic readings that may offer clues on scope of further easing by the Federal Reserve. Okay, so this week data, and tonight we will be discussing what happened from the Australian rate decision and also the Japan manufacturing PMI as well. All right. So we will be just having another decisions which will be coming out from the Switzerland stock market, Switzerland Central Bank, as you guys can see here at the Thursday policy meeting, where we will be seeing it will be impacting the Swiss franc. So if you guys do trade on the USD CHF Japanese yen, definitely it would be kind of an interesting market movement from today until the release of the interest rate decisions. And a lot of people and even economists has been predicting that it will be cutting the interest rates by 25 basis points. So expectations are quite high, and some of the economists, just a small number of economists, expected that they will be cutting interest rates by almost 50 basis points, not just 25 basis points. So there will be some huge movements on those trading pairs that related to the Swiss franc. Okay. As we can see from these charts, it has tried to show that the market momentum has shifted, that our readings has been kind of wrong. But one thing is for sure, we are still seeing the strength coming up from euro. That's one thing. And the next will be still coming up from the US dollar, rebounding quite fast after weakening yesterday night. And then alongside we have CAD still strengthening. And the most notable thing, we are seeing that Swiss franc has started to weakening. So that really enforces what my view is. Later tomorrow, I'll be talking more about that. But one thing is for sure, we could be probably trading across the pairs such as the Euro USD, Euro Japanese yen, because we need to trade from the strongest pair against the weakest pairs. So Euro Japanese yen could be one of the choice, as well as CHF Japanese yen could be one of the choices as well. But probably it won't be a good time to do so since the Japanese yen also weaken. But probably the best thing could be coming out from Euro Japanese yen, USD JPY, as well as CAD So I'll be looking through those charts. Okay. All right. So we will be discussing from the gold point of view after reaching the record high prices. Okay, so we know that yesterday after the end of the live streaming session, so we do see that the gold prices managed to break out of the important resistance area around 2630 towards 2640, and it break out of it and managed to reach a high of around 2670 at the early Asian sessions, and right now it has been retreating back and then trying to consolidate, finding the sideways range around 2650 towards 2660. And one thing is for sure, that uptrend momentum is still continuing from the gold's side. As you guys can see, I have already see the outlook that it is more likely to go higher in the future. And we are seeing the possibility that today would be the weakening phase of the market for today. And there will not be a lot of surprises I'm seeing from the market news. There isn't a huge news. Probably it will be just coming out from the US new home sales. But other than that, there isn't a lot of news coming up for tonight. But tomorrow definitely will be kind of a big news on the market as we have a US GDP revision data, as well as we will be having data such as the US initial jobless claims and the US durable goods. So it will be quite an important day tomorrow, as you guys can see that there will be a lot of Fed officials talking, and ECB side will be also talking as well. So I'm expecting tomorrow will be quite an interesting market out of the Swiss franc and also the US dollar, which will be impacting gold and silver prices, and definitely it could be impacting the copper prices as well. Okay. Yesterday, I do give out an outlook on the gold market where I'm expecting that it could correct itself for a few days before reaching higher prices. But eventually, with the release of that weak consumer confidence data, it really helped to push up the prices, easily breaking through out of the 2640 prices. And right now, we will be seeing that there will be a lot of things that will be coming up later on. So based on tonight's gold price patterns, definitely it's a very tricky situation for most of you guys because you are seeing that it was very bullish on the early Asian sessions, and after the London sessions, it managed to correct itself down, and currently it's just trading beyond this range. So right now we are waiting for clear confirmations whether we'll be going higher or going lower. But from the current charts that we are seeing, one thing is for sure. that the main trend out of the gold, if you're looking from a daily time frame, it's very obvious that it will be going higher. Right now, it's just about the timing, whether you want to enter at the current prices, which could be offering kind of a low risk reward ratio, or are you guys going to wait for more confirmations and buy at a higher prices? It's really up to you guys. But I will be giving up another signal later on. But one thing is for sure, I will be much more adamant waiting for more confirmations on those price actions, because right now we are in the cusp of a very important price resistance and price support around 2650 towards 2660. Okay, all right, all right. So if we look at these charts, probably it will be much more likely to go higher. But I'm more willing to wait and try to see the other precious metals such as the silver. I'm probably looking for more insights from the copper side as well. It could really determine and give us some kind of insights on the metals prices and where it will be going in the future. Okay, so right now we are still seeing that most of trading pairs are after reaching the resistance. Right now they are consolidating around this area. Probably we will be waiting for more market reactions, especially it's kind of a mixed signals out of the silver market. As you guys can see, it has already broken down of the uptrend line, and right now it has already trying to breaking out of those. And we can see it's a very clear market movement that there's a possibility it will be breaking out of that sideways after breaking down those downtrend. And right now we are seeing the possibility of building up a new uptrend momentum. But it seems right now it has been rising quite fast and has already broken out of those uptrend lines. So I'm expecting there will be some kind of rest area around this sideways range from $31 5.50 towards the $32. So I'm expecting there will be some kind of resistance and price movement ranging between those price actions. And probably it will be much better to have that confirmations if you guys are a long-term trader, or if you guys do swing trading. I'm expecting that there will be some kind of a market ranging around this area for the silver market. 31.4 towards 32.1. So after reaching the resistance and after almost breaking out of the all-time high levels, I believe. So let me check. Yep, it's almost breaking out of the all-time high levels. And right now we will be waiting for more confirmations on the price action side. It seems that the market hasn't allowed it to surpass that high, and we can still see that there is still another resistance area around the high of this. So it's very important. Price at $32.50. So I will be looking through all those major resistance, especially it's giving a lot of long wicks when it was trying to break out of those resistance and didn't manage to do so. And I will be paying much more attention around those price actions at these prices as well, where they almost reach around $32.30 and retreated right now towards $31.80. So my view on silver market and gold market is quite similar for now, as you guys can see. Right now, they are trading in this sideways range, and it's very important to be much more patient. Whether you're a short-term trader, whether you're a long-term trader, like a swing trading, I believe that after getting the confirmations out of this sideways range would be giving a lot of more confidence of it to go higher or go. But one thing is for sure, I'm seeing the possibility of it going higher. That's for sure. As you guys can see, after breaking out of this chart pattern, which I'm seeing that it's similar to a rising wedge, but it didn't really seems like so. I'm expecting that it could be mimicking another new bull flag, but it didn't really seem so. Yeah, I'm much more looking through the possibility of the continuations of the uptrend, even an accelerations from its previous uptrend momentum, and it's building up another new uptrend. So I'm expecting there will be some kind of a consolidations around this area. That's for sure. And the overall trend is very clear. It's going higher, but I will be much more willing to wait after it breaks out of 2658 to get that kind of confirmations out of the market. Okay, so if you guys have any other questions or anything you want to ask about the outlook of other assets such as the stock indices or the commodity sides, maybe the currency pairs. Okay, so I'll be looking through the currency pairs, which maybe could give us some interesting market movement right now. So AUD USD, let's check it out first before I started to discuss about that topic. So yesterday was kind of a good market for the Australian dollar, USD, breaking out of the resistance and managed to reach around 69 cents to dollar. Okay, so right now what we are already seeing is I've been giving out this signal, which I believe has would have been executed, and it was below my stop losses. So unfortunately, this has reached the stop losses. So probably giving you guys a much higher stop losses will be a much better scenario. But one thing is for sure, the uptrend is clear. We are having breaking out of what I would say a chart pattern of cup and a handle on this area, as well as we are seeing that Australian dollar managed to break out of its mm, downtrend line after having a downtrend from 2021, and right now it has been able to break out of that downtrend momentum. So I'm expecting there will be some kind of confrontations on that side, and that will be taking some times to really see the potential of it going higher easier in the future. So I'll be readjusting these charts so I can see clearly. All right. All right. So that could give us a kind of clearer conditions, and it already break out of those downtrend line. And right now we are already breaking out of that downtrend line. So I'm seeing a lot of momentum of it going upwards. But before that happens, reaching around 70 cents to a dollar, I'm seeing the possibility of it to correct itself around this area before it would be bouncing higher in the future. Okay, so I'm expecting it to reach around 69 cents in the next few weeks. There's a possibility even right now after the release of the Australian side where they are seeing that the monthly CPI data has been lower than the previous forecast and even lower than the previous numbers, and that's why we are seeing the weakening of Australian dollar, because there's a possibility after the weakening of this inflation data that could be an early indications of the directions of an early easing rate cut cycle from the Australian Reserve back. So that's why we are trying to look for more clues on the price actions because sometimes it could give us a much more leading indicator. And from what right now I'm seeing, there's a possibility of it to correct itself, retreat around 68 cents to a dollar, and then it will be having the foundations and the base to go higher around these prices in the future. But right now, it didn't really offer us a very good entry point, and I believe that is also the case for the New Zealand dollar side. So probably the best trading pairs would be coming up from the USD JPY, CAD JPY, as well as the Euro JPY. Okay, so Euro USD could be one of the good choices, but it seems that USD has been gaining some kind of strength at the London session. So see USD CAD. Okay, so it seems that it has started to weaken as well. I believe it reached. Uh, okay, so from the US dollar, Canadian dollar doesn't also offer us any good trading pairs because it started to rebound, didn't really follow through on that downtrend continuations. So probably we'll be checking on the Japanese yen market. Probably could give us some much clearer indications out of that market. But overall, we are still seeing that downtrend persisted. And it's the same thing, just trading between the ranges. And after falling down quite a much, it's just rebounding for today. I think it's the same case for the Euro Japanese yen. Still facing some tough sell area, resistance area over the last month. Okay, probably let us check USD CHF. It also started to rebound surprisingly. So I'll be waiting for more cues on the price actions because currently on the currency pair side, we are not seeing any interesting pair for now. Probably a short pair for CHF yen could be one of the good choices, but right now it seems that we have missed our timing. Yep, yep, it still managed to respect that trend line, and I'm expecting that right now it's not a good movement to do a short after reaching the support area of the trend line, even though the more likelihood that it could go down in the future, definitely. What else? GBP showing us that same trend across the USD pair after weakening last night. What else? I think I almost covered all of the pairs. Probably GBP could be giving us something. Hmm. All right, it could be giving us something, and but not this one. Mm, okay, so from the currency market, it seems there isn't a lot of choice for today, surprisingly. Yep. But definitely there will be some momentum coming up again across the US dollar pairs. Probably GBP JPY could be one of the best trading choice for now. Okay, but we'll see it later on. Yep, even across the Japanese yen pairs, only NZD JPY could be giving us some kind of good indications to enter, but it seems we have missed the uptrend breaking out of this cup and handle formations. And if you look at a daily time frame, I think we have been quite late for a while and it's almost reached the resistance area. So in terms of the price actions doesn't really offers us a lot of room to have a buffer. And in terms of reward, it's just another 40 cents, I believe. Okay. But it could be one of the considerations alongside GBP JPY. If it could break out of this, it would be much a better conditions rather than the NZD JPY. Probably could be checking on the other pairs. Yep. Overall, I'm not seeing any good trading pairs on the currency side. Even the US dollar started to strengthen from the low for around 20 points I'm seeing right here. So I'll be taking a look at it later on, GBP and NZD and probably CHF has been strengthening surprisingly. So probably it could be a good time to do that short on this USD CHF because a lot of people are expecting a rate cut out of the Swiss franc, and it could offer us a good risk reward ratio right here. As you guys can see, let's say we do take our losses here, try to aim around here. It could give you guys a risk reward ratio around 2. So this would be a good trading choice for now, other than the GBP JPY and the NZD JPY, which seems right now it's very close towards the resistance area. And if we are trying to do a long, I didn't think it could sustain that strength and momentum. Okay, so I'm much more considering this choice for a short on the USD Swiss franc, remembering that there will be interest rate decisions out of Swiss franc. Okay. Okay, so I think I'll be looking back at the gold side, seeing if there is any market changes after kind of sometimes, but it seems that the price of gold hasn't moved much. As you guys can see, it's still trading around this area. It's the same case for silver as well. So probably waiting would be the best case scenario for now. All right. Seems that crude oil could be one trading choice. So let us put a sell on oil market for now. So actually, if you guys do follow us and register as a member, I have shared this exclusive signal on the channel. And if you guys do register as a member, you can also get other exclusive signal out of the other live streamer. And right now, the signal could have been profiting. So let me check it with you guys later on. So put the stop loss around 72. E. Okay, there you go, guys. That's one of the first signal for today because it seems there is a much clearer signal on that side. Probably after breaking out, I could be giving out another buy signal for the gold side. Okay, so let me check on what I've been sharing. Has it reached its price target? Okay, so it seems that it has reached its target price for the exclusive signal that I've shared before the live stream. So if you guys do follow us as a member, you could get earlier signals before the live stream and after the live stream sessions, which usually some opportunities could be arising before and after the live streaming. And I will be giving a much more updated and real-time signals from there because sometimes market opportunities can come at any time, guys. Okay. So if you guys do follow that signal, you guys could take profit on the second price target, okay? For the signal that I've shared before the live streaming sessions. Just notifications for you guys. Okay, so I've confirmed that the signal that we have shared reached its second price target on the US oil signal, okay? So let us continue back towards the lessons for tonight, what we will be discussing. Okay, so I think I will be sharing that buy signal out of the gold market because I'm seeing the possibility of it breaking higher now. Try to aim for 60, 62. Then the next target could be around 65 and 67. I think this is much harder for the third price target, so I will be just giving you guys that. Okay, so this is the second signal for today. All right. Okay, so I will be back with the lessons. So I'll be giving guys that short signal for both oil and gold, and I'll be back with the materials and see what happened on the market and what can be used out of those events. Okay. All right. Let us get back to the slides. And one thing is for sure, we will be discussing about the Australian bank rate cash rates, which means it's the same as the Fed rate, but it's just on the Australian side. Okay, so as we can see that Australia's central bank has already signaled that it will keep its key interest rates at 12-year high and holding back from joining the global easing cycle with Governor Michelle Bullock stated on a press conference that it will keep it for a seventh straight meeting. And this is out of Michelle Bullock's statements that the RBA isn't ruling anything in or out on policy. And unlike in August, when policymakers put a rate rise on the table, this time around a hike wasn't explicitly considered. And the Reserve Bank is focused on returning inflation sustainably to its 2 to 3% target. And right now, that inflation target has reached from the released data this morning on the Asian sessions, and the RBA's communications on Tuesday highlights its outlier status compared with peers, acknowledging the divergence, and had moved to a much more restrictive territory than the RBA, because we can see that the Reserve Bank of Australia hiked the interest rate less compared to its global counterparts, such as the England side, also from the US Federal Reserve. They are hiking the interest rates on a bigger basis by almost a total of 5%. On the BOE side, it's also around 5%, and also from the Euro area side. Meanwhile, we know that Australia's central bank just raised the total interest rates from the pandemic era until now, it's just around 3 to 4%. So that's why they had been able to not started to easing their interest rates, but still be able to sustain that economic level. And currently at the previous numbers at 3.9% core inflations, it is largely mainly driven by non-discretionary spending such as insurance, education, and housing. Meanwhile, the job market still remains in very good shape with unemployment still at a 4.2% low. And as a result of this data released last yesterday, the currency of Australian dollar fell with $68 to 17 US cents in early London trading, erasing a prior gain, while the yield on the 3-year note fell the most in almost 2 months. As swap traders started to price in a 74% chance of a rate cut up from the 50 to 50 just before Bullock's press conference, and economists generally expect rate cuts beginning in February. Okay, monthly data on Wednesday is expected to show inflation fell back within the RBA support band for the very first time since August 2021, as reflecting the government energy subsidies and other measures. And Bullock cautioned that the board wants to be confident in price growth, moving sustainably back towards the bank goal, not just moving in and out. So this is a very important statement. Even though, yes, today's data has shown that CPI data has been falling down towards 2.7%, around that 2 to 3% target, as you guys can see here. But one of the very first key things is they need it to be around those range. So they don't want the inflation rate to be, for instance, let's say it has fallen down towards 2.9, 2.7%, and then it could go higher again, and then could go higher again. This is not the scenario that the RBA wants. So what they really wanted is inflation target could be moving slowly around that 2 to 3% area. So this is what the RBA would want, around 2 to 3% target range. Okay, as you guys can see, this is around 3%. So they want it to move slowly between this range rather than falling down quite fast before picking up paces in the later months on the CPI inflation data. As you guys can see, the Australia inflation is the highest compared to the other counterparts, such as the US market, Canadian, Euro area, and New Zealand. As you guys can see, that even New Zealand, the neighboring country, is already at a 3.7% inflation rate. Meanwhile, we are already seeing out of US it's around 2.6%. Canada is around 2%. As well, Euro area is currently at around 2.4, 2.3% inflation rate. So currently, before today's release of data, inflation rate was still at around 3.9%. Right now, it has fallen down towards 2.7%, showing some improvement on that side, but they need something more certainty on the long run rather than just a one-time drop of inflation. Okay. And as a result of yesterday's news coming out, people are already lifted the chance of a rate cut by December from 50% right now to 74%, if I'm not wrong. Okay, so people are already raising the chances for a rate cut in December, as people a lot expected that inflation rate would be falling down with that data tonight, of the data released today. Okay, and the other thing that the Australian government also look at is the unemployment rate. Currently, it still holds steadily below around this 4% target range and 5% target range. So if nothing goes worse on this labor market and also inflation starts to fall down, there is a possibility to a rate cut on December, but it will be taking some time towards December. It will be another 3 months. Okay, so that will be around 3 to 4 months. So we will be seeing how the inflation side works, and we can see whether there's a huge possibility of another rate cut for the very first time on the Australian side after we will be seeing the developments out of the Australian economy. Okay, so what can we market to trade on the Australian dollar? As we guys know that the US dollar starts to weaken, and as a result, Australian dollar managed to break down of that downtrend line for a very long time. And right now, we are seeing the possibility of corrections around this area before bouncing back higher in the future. But for now, today won't be a very good trading time. As you guys can see, it is much more likely to go down. And since I'm not a favorable to have a short-term trade, but if you guys do trade on the short term, you can try to short it, cut your losses just above this if you guys want to trade. But I won't be doing that trade since I am not focused on the short-term momentum. So you guys can cut your losses around this area. Okay, you can try to short, you can sell it, and cut your losses at six $68.86 compared to the dollar. Okay, all right. So if you guys have any other questions, you can join us at our website and let me know if you have any other questions, because right now I'm not seeing any discussions on my site, so I won't be able to answer your questions or your inquiries for now. Okay, so if you do have any inquiries or anything that you want to ask, you can directly click on our website and join as a visitor to ask for more of your questions or your inquiry if the time allows us to do so. Okay, but for now, one thing is for sure, we can try to trade on it and probably aim around this area as the price target. Okay, at around 68 to 68.6. Okay, 686. So it could give you guys around 10 pips to 15 pips. So that won't be a very bad trade in terms of risk and reward ratio. Okay. So I will be continuing the lessons. If there isn't any questions or any inquiries on my outlook of other currency pairs or the commodity sides. So I'll be discussing about the next material. Okay. So if you guys have any other questions, you can directly click on our website link to join in and let me know your comments or discussions. Okay. So I will be back with the lessons continuing towards the Japan's market. So Japan's market has been releasing a data out of the PMI. It's late compared to the other counterparts such as the Australia side, UK, Euro, as well as the US. And yesterday, the Bank of the Japan side released those PMI data. And one thing is for sure, we are seeing that the overall business sector economy has started to soften, especially from the manufacturing side. But the services sector has been able to provide the boost and maintain the overall composite data not falling too much. Okay, so that's one of the very good things, but it's giving us kind of mixed signals because manufacturing side has never been uh, a problem from the Japan side, and right now from this economic data, we are seeing that the manufacturing side has started to fall back into contractions, as you guys can see, falling to 52.5 for the overall data. So the composite data combining both manufacturing and the services data. So if you guys add up 49.6 plus 53.9 divided by 2, you will get 52.5. So that's how the composite data is getting its number from, right? So the flat service purchasing manager index rose. Meanwhile, from the manufacturing factory PMI slipped to 49.6. And the overall survey has shown that the growth in new orders has started to little change, but there are some sustained fall in the levels of outstanding businesses. And the weaknesses in manufacturing was directly driven by the persistent disruptions in automobile productions, as well as the country's biggest producers grappled with a growing safety scandal. However, there is some good news out of the service sector, where there are a very strong private consumptions, and after Japanese labor unions managed to win a bumper of wage hikes earlier this year. Although sentiment remained elevated, the degree of confidence eased to the lowest level since April 2022 on soft Chinese demand. So that's why the Chinese government has been providing out a large stimulus yesterday. And on the price front, which means on the price inflation, data has shown that inflation has been slowing down in both input costs. Input costs means it's the raw material has been falling down towards the 6 month low. Meanwhile, output prices, meaning is the selling prices, inflation ticked up in September due to stronger rise in charges at service providers, although average operating expense remain historically high. So these news are giving some kind of mixed signals out of Japan's economy, where a lot of the Bank of Japan's officials sees that the economy is still doing very well, but out of this data, it has started to weaken for this month. But the overall data we are seeing, if you guys look at this, it has been showing a very clear signal that the economy is still doing well according to the overall trend that we could be seeing on this site. It has still sustained its trend going higher, or it could be probably just rebounding around the range of 50 towards 50.2. And even though we are still saying that the GDP on a year-to-year basis has started to fall down on this graph, but the overall composite output still gives us some confidence that it could sustain its economic level. And if we try to look from the manufacturing side, we know that it has started to fall down below this 50 mark, which separates growth and contractions. Below 50, it will be giving us that decline on the manufacturing activity on Japan. If above, it shows that it was in a positive growth. And right now, we are seeing the possibility of the weakening side on the manufacturing side on Japan in the upcoming months. As you guys can see, it started to weaken for almost straight 2 months. Meanwhile, we are seeing the service sector on the Japan side are still strengthening, as you guys can see. Still managed to get that rebound and even growing from the previous month. As you guys can see, in terms of household spending, it also managed still to boost some growth at around 1% level. Okay, so that's a good thing from the household spending side, as you guys could see on this gray bar charts. All right. So out of that data, we could know that the data that we have seen here, because price inflation has slowed down, there's a possibility that the Japanese yen, the Bank of Japan's official, won't be hiking interest rates faster than expected. So what can we use out of that? So it means that there's a possibility that the Japanese yen could remain weaker in the future until the next two meetings, which will be around the November meeting, because recently we do receive a data out of Kazuo Ueda, the government of Bank of Japan, stating that they won't be considering a rate cut even in the October meeting. So there's a possibility that the only chances for another rate hike will be coming out on November. So there's a possibility that Japanese yen could weaken until the November meeting arrives. Okay, as you guys can see, the best trading pairs against the Japanese yen right now would be coming out from the NZD JPY and GBP JPY because we are seeing that it managed to break out of those resistance line, and there's a possibility it could continue that breaking out of those resistance line that has been formed over the last month. Okay, so overall we are seeing the signs that across the Japanese yen pair, it will be giving some conditions to go weaker for the Japanese yen, and all the other currency pairs could remain stronger. Maybe for the exceptions of the Swiss franc, it could go weaker with the expectations of a rate cut in the future. But other than that, I'm not expecting for the other currency pairs could do much well on that side. So probably I'll be taking more focus against the Japanese yen pair for a much longer term trade. Will be coming out from the GBP JPY. That's one of it. GBP JPY almost reached its high during the weakening phase of the other currency pairs. And also, if we look at NZD JPY, could be giving us much more confidence of it breaking out of those highs. Maybe the third choice would be Australian dollar, Japanese yen, because we are seeing that kind of strength. But for the other currency pairs, I'm not that sure in terms of its strength because it's currently not even touching the highs around here. It's kind of far off a mark. It could still needs another $2 increase, two yen increase around this, or even if you compare it against the USD JPY, you need to have another 3 yen increase to just make sure that it has given us that confirmations. Although in terms of the current downtrend line, it has already started to give confirmations. There's a lot of resistance coming up ahead. Okay, so that's why I'm more prefer to choose the ones that could be giving us much more runway to go and less of resistance in the coming weeks. Okay. So if you guys want to ask questions and get your inquiries answered, you can try to click on our website and join on the discussions because until now I haven't seen anyone here, and that means I believe that most of you guys don't have any other questions to ask about other trading pairs. Probably if you guys are interested in the stock indices or if you guys are interested in the cryptocurrencies, you can definitely let me know, but I'm not seeing any responses on the website, so I couldn't be answering if you guys have any other questions. Okay. All right. So let us check back towards the gold price. Okay, it seems that the price has reached breaking out of it. So if you guys do make the trade out of it, I believe that most of you guys will have been in a profit for now. And let us see. It will be shortly touching the price target number one around 2660 in probably less than 5 minutes. So we will be looking at it later on. But I believe it will be reaching the price target when I'm still looking for the lessons. Okay. All right. Probably one of the best choice right now we could be looking at the silver market, but it hasn't been moving too much, honestly speaking, guys. So definitely the best entry point would be around 31.90 cents. Right now it's already up by 5 cents, so it's kind of late. But if you guys focus on gold, definitely it could be focusing on this first. Okay, maybe on the oil side. Okay, so it seems it has fallen down, reaching the second price target as well. Okay, so if you guys do follow the trade that I've been sharing, I believe that most of you guys are earning a profit in both oil and the gold trade. Okay, so if you guys are late, I'm sorry, but time couldn't be returned. Sometimes timing and entry prices are very important in trading. Okay, and you couldn't miss both of them. All right, so I will be moving on towards the next lesson, which will be coming out of the Germany side. So Germany is one of the biggest country in the euro area, and anything that is related on the German side will be definitely impacting the euro, which will be impacting its currency euro, as well as the stock market. As well as there is another stock market on directly related to the Germany stock market, which is the DAX. Okay, so if you guys do trade on that, I believe there will be some chances coming up because right now we are seeing the disjointed correlations between the real economic situations on Germany and compared with the rally that has been happening on the Germany stock market. Okay, so actually I've been sharing it about that over the last day, over the last 2 days, and I think I'll be just giving you guys that small outlook if you guys are interested on that. Okay, so I'll be giving you guys the conclusions out of these slides. As you guys can see, business conditions are worsened compared to the forecast. You can see it's getting worse, and expectations and the current conditions are also getting worse. And that number is the lowest since February and slightly below forecast. And the barometer of current conditions and expectations will decline strongly. And that reinforced the fears that Europe's economy is in a recession with no quick rebound imminent. And the clear weakness is really coming up from the manufacturing economy side of the German, right across the board from machinery, chemical industry, electrical equipment, and definitely the car industry is one of the biggest components of the German economy. And those companies are telling us that they are lacking orders. And on top of that, the weaknesses in the service sectors also followed alongside. And its latest purchasing managers index also fell more than anticipated to 47.2, the lowest level since 7 months and below that 50 contraction mark. And the Eurozone PMI data also dropped below 50. So that's really helping the dire situation on the euro area. And talks of Germany's economic decline is growing louder after a spat of bad news underscored weaknesses in the key automotive sector. Even as the Bundesbank, one of the biggest banks in Germany, stated that Germany may already be in a recession, and with another contractions in the third quarter after a possible 0.1 decline. And until economists have already even begun lowering economic predictions for 2024, some are already seeing stagnations or even a slight downturn, as Germany is the only economy around the group of seven to contract in 2023. And this later news just implies a weaker near-term outlook, as they see rising disposable incomes but doesn't see any consumptions. Saving rates has increased, suggesting people are worried about the future in line with the barometer of the current conditions and the expectations of the future. And markets are now leaning towards a third reductions of the year in the deposit rate on the euro area, bringing it to 3.25%. So all of this data really shows that it's a very hard situations on the euro area economy, especially on Germany side. And one thing is for sure, with this outlook, definitely it could push the ECB, the European Central Bank, to decide for another rate cut on its key interest rate. Okay, so as you guys can see, the business outlook is getting worse and worse over the months, and for almost every month when there is this data, I've been always telling you guys that the conditions are getting worse from a month to month basis. And if you guys look from a year to year basis, it's much worse. As you guys can see, it's just getting lower and lower. Okay. And this is the data coming up from Germany composite data, where it was released on Monday. So I've discussed it yesterday. If you guys do follow yesterday's live stream, I do believe that maybe you guys have a look on these charts. And these charts combines both the two biggest of the largest Euro economy, the German economy, and as well as the French economy. And both of them are showing contractions in both manufacturing and services sector as well. But today we'll be just focusing on the Germany as we just discussed on it, and it's just showing us that downward momentum in the overall composite data as well as in the manufacturing and services industry, all showing the signs of slowing down. So it's a very dire situations on the Germany economy. Easy to weaken in terms of the currency side, but surprisingly, we do know that the US dollar has also weakened with the expectations of a further 2.2% rate cut until the end of 2026. Meanwhile, we are not expecting that huge of rate cut. And we do know that the euro has been weakening over the last few years, as you guys can see on these charts, when we are seeing a very strong dollar over the last 1 to 2 years, I believe, guys. Okay, 1 to 2 years has been a very strong year for the dollar. Right now, a lot of people are very bullish on euro. So, despite the weaknesses in the euro economy, we still see the bullishness in the euro area, the euro currency, and definitely we can ignore the fact that even though Germany's current economy is very dire, we still see the arrival of the data has been already priced in the previous months. And right now, from the currency market, people are expecting much positive things. And that's the very reason that could be the reason that the euro currency has been going stronger against the dollar over the last 13 weeks. And you can see that it's almost reaching 8 weeks high or even 13 weeks high from what I know. Okay, so it's around, yeah, it could be a 13-week high. Even that's the same case for the pound sterling against the dollar. So with that news in mind, we do know that the worst is almost over in terms of we can see that the market has already priced in that weaknesses in the previous one, the last year. And right now we are seeing the strength coming up from the euro as we know that the US dollar index has started the declining phase. Because if I show you guys the US dollar index, it has been weakening over the last. So why is the euro USD could still remain stronger even though the expectations of a further rate cut on the ECB side? One of the very first things that we need to look at is the weakening of the US dollar index. As you guys can see, I even forecasted when it reached around this area, it could probably be trading in a sideways, but surprisingly, it just dropped below that and even started to go lower and continuing that downtrend line that I've drawn over the last few months. And right now, we are still seeing that weaknesses persisted on that side, albeit that euro still going to cut the interest rates, but we are still seeing the weakening signs on the US dollar index, and that definitely wouldn't help on the euro. As you guys can see, the euro currency still managed to remain that kind of strength after weakening for most of the part alongside 2022 towards 2024 mid, and right now it has started to show some bullishness in terms of the euro currency's charts. So that's why we can see, despite the worsening data out of the Germany side, we will be seeing that euro currency could be stronger, and all of those data has been currently, if we are trying to look for some reasons, there is a possibility that the news has been present across the previous year. That would be the case. And right now, the best case of scenario after breaking that high would be doing a long trade on the Euro USD side. So if you guys want to do trade on it, you can try to buy it around these prices, try to put your stop losses around here. That is my suggestions for you guys, okay? You can try to buy it at the current prices and cut your losses at around 1.175, okay? Then I will be showing you guys the stock market on the euro side. So this is what I'm currently seeing on the euro stock market. I'm seeing the possibility of a topping phases, but probably it could take some time before reaching this price target. But we need to make predictions towards Germany stock market, as we can see that it is much more relevant towards the, and definitely it could be getting worse on that side. So it's very much important to look at the DAX. But surprisingly, as you guys can see, the stock market has just kept rallying and going higher and higher across the days. So it's a very hard time to do that short, even though we know that the German economy is doing very bad, but the stock market somehow just gives another surprise. So probably when the weakening started to happen in the future, then we can probably try to sell the DAX market. As we know, German economy is not doing very well. But as the optimisms really boosted up coming up from the Fed rate 50 basis point cuts, and yesterday we also have the Chinese stimulus from its government, and that definitely would be helping the rally across the world from Euro, London, also the US. Okay. So that's why it's also helping to boost the prices of the gold market. Okay, right now it has already reached our first price target, and it could be going higher towards the second price target. So if you guys have already opened the positions for this signal that I've shared, you guys could do it on two choices. First, you guys could take half the profit and keep holding the half of the positions, or you can guys just directly take off the profits, or you can try to aim for the second price target. It's still a possibility to happen. As you guys can see, it has still the long runway to go higher. Okay, so I'll be back with the lessons. It will be around the US market, and it will be just the last two news, 2 to 3 news, all related to the US market. Okay, so as you guys can see that the US consumer confidence has been going lower, and that really helped to push the US dollar index lower yesterday night and really helped for the gold prices going higher surprisingly yesterday. So you can see that the US consumer confidence are down even with the refis going higher. It's fall by almost 7 points, and it was the biggest drop since August and 2021. And it's below all the estimates, definitely. And the measure of expectations for the next 6 months also declined in September to 81.7, while present conditions also dropped to 124.3. And all of this concerned about the weakening labor market and the outlook for the broader economy. And all of this recent slowdown is alongside persistently high cost of living is weighing on consumer confidence, as keeping the gauge well below pre-pandemic levels. And the details of the mirror reports concerns about the job market that really helped to the Fed deciding to cut interest rate by 50 basis points last week. And that deteriorations across the index main components likely reflected consumers' concern about the labor market as there is some reactions toward fewer hour working jobs, slower payroll increases, fewer job openings, and if the labor market remains quite healthy, low unemployment are still there with few layoffs, while it is giving us an elevated wages, which is a main sources of the US inflations over the last year. And if you guys look at it, the share of consumer said jobs were plentiful decline for 7 months to 30.9%, the smallest share since March, and the streak of decline is the longest since 2008. And the share saying jobs were hard to get rose to 18.3%, the highest since early 2021. And the difference between both jobs are plentiful and jobs hard to get has narrowed for an 8 month and the longest since the Great Recessions, meaning that in terms of the job market, it has been kind of hard to get a job and the availability of jobs is much more lower for now. And roughly a third of consumers expected lower interest rates in the next year because we already know that there's a plot dot from the Fed to decide for a rate cut and where the rates will be going on. It will be around 2.7% towards 2.8% in the next year. And it was the highest share since April 2022. And as a result of this data, SP 500 and the 2-year treasury yields were lower after the report, but it managed to close higher for the SP 500 at the closing time of that day. Okay, so if you guys do look at these charts, this really shows you that consumer confidence has been actually slowly declining over the past year. So it's not a surprising data because the US economy is doing very worse right now. And that labor differential has been also falling down quite much, declining for almost straight 8 months, showing that the labor market has been very tough for people who are trying to find a job and for even people trying to have the job availability to them. Okay. And as a result, a lot of people are already positioning themselves on the futures market on the 10-year note and also the 2-year note. As you guys can see, a lot of asset managers has been quite bullish on the treasury yields, meaning that they are expecting there will be a lot of rate cuts. Though we can see hedge fund has started to slow down their purchases of those 10-year note yields, but we are still see the overall asset managers purchases are still net long. As you guys can see on the next graph, that most of the clients are mostly in the net long positions, and it has been the most since December. As you guys can see, that most people are bullish towards the treasury yields, treasury notes, meaning that they are positive that the treasury yields will be going lower and that will be resulting into higher prices of the bonds and the treasury notes. So that's why we can see that the number of people longing the treasury notes are going higher, shortings are going lower, and neutral are started to going lower as well. So that's why we are seeing the net long position started to remain quite high. Okay. Next, we will be having a news coming up from the US house price indexes, where we are seeing that house prices were up by almost 5%. From the revision, it was slowly going down. So I believe that this revision data really try to shows what the US government has been saying, that even house prices have started to go down. But if you guys try to see on a monthly to monthly basis, it actually still managed to grow by 0.1%. And US Schiller on a 20-year basis were up by almost 6% from previous numbers at around 6.54%. So home price gains in US slowed in July, with the national measure of prices rose by 5% from a year earlier as the high mortgages rates kept would-be buyers on the sidelines while inventory piling up. And July, a measure of 20 cities, so this is the data, shown that rose by 5.9% from a year earlier compared with a 6.54% annual gain. And after seasonal adjustment, prices from a monthly basis were up by 0.2%. So this is non-adjusted, so that's why it's showing us 0.1%, reaching a record for a 14 consecutive month. And the index for July tracks a 3-month period starting in May, where 30-year mortgage rates peaked at 7.22%, and since then, borrowing costs have declined. But affordability remains a hurdle, as we can see supplies on the home market still going higher, and active listing jumped 14%, but most of it are stailing as sales in general have been subdued after the worst spring selling season in more than a decade, meaning that a lot of people are not buying houses even though there is a lot of listing, people selling their houses, but people are just not interested in buying house because of the current high interest rates at around 7.22%. Right now it has been falling down to 6.5%, but people are already expecting that interest rates will be going lower, and that's the fair reason why those people are still waiting on the market. And you guys can see with financing already considerably cheaper than in May a high probability of further declines, there's a significant chances that the rate of home price growth will be bottoming out over the next month and then re-accelerated at the end of the year as there will be more favorable rate environment for home buyers to start buying more houses at the end of the year or probably at the bottom of the beginning of the next purchasing home buyers. Okay, as you guys can see that home prices has been very positive over the last 14 months, has been growing up on a monthly basis, even from a yearly basis. As you guys can see, year to year has been rising up by almost 6%. On year to year basis, it's just up by 0.27%, but it has been increasing for straight 13 months, around 1 from 0.27% towards 1%. So if you total it up for 1 year, home prices has been increasing up by almost 10 to 14%. That's a huge increase. And you can see that these home prices numbers really gives you that home prices are still going up pretty much quickly. And if let's say home prices started to fall down a little bit, there's a possibility of a re-accelerations when the mortgage rates could come lower. So that could really help to push the inflation side, giving higher prices, higher inflation as well. So that's why we will be having a discussions on the last slide, which will be covering up the Federal Reserve Governor Michelle Bowman. So it's a different Michelle. So just now I've been stating on Michelle Bullock on the Australian side. Now we have a Federal Reserve Governor Michelle Bowman from the US side, saying the central bank should lower interest rates at a measured pace, arguing that inflationary risk still remains there, and especially the labor market has no show sign of significant weakening. As Bowman dissented against the central bank decision to lower interest rates by half a percentage point, becoming the first Fed governor to dissent since 2005, and her preference for a more measured approach as the central bank began cutting interest rates reflected several considerations. And that really contrasts between Bowman and the other Fed officials, as they are seeing that two goals of maximum employment and stable inflations were roughly balanced. And Michelle Bowman is arguing that it is still going okay. And so this is her statement where she is saying that in my view, beginning the rate cutting cycle by a quarter percentage point move would have better reinforced the strength in economic conditions, while also confidently recognizing the progress towards our goal. And I was taking less signal from the recent labor market data until there are clear trends indicating that both spending growth and labor markets have materially weakened. And she is also supporting taking actions and adjust monetary policy as needed, while taking into account our inflation mandate. Because she is seeing that core inflation stripping for that categories still remains above 2% inflation goal, and by moving at a measured pace to a more neutral policy stand, they are much better positions for the Fed to bring down inflation to 2% target while closely watching the evolutions of labor market. Because women are afraid that she appreciated Powell directly addressing in the press conference that her concerns that with a 50 basis point cut, people are expecting that the next Fed rate cut will be at around 50 basis points. So that's one of the very first reasons why Michelle Bowman disagreed with a 50 basis point cut, even though from her view, she is still seeing that the labor market hasn't worsened yet, and also from the economic side is still doing fine. So that's why she is not agreeing to give a 50 basis point cut, but much more towards a 25 basis point cut. And because you can see that even from the consumer confidence are started to worsening, so I believe that most of the Fed officials are much more true in terms of what they are saying. The economy has started to weakening. People are expecting that the economic situations are not doing very well. Okay, so in conclusions, I've been sharing practically almost all of this, and I've been giving out the outlook on all of these instruments. And as usual, if you guys are trading on your own, it's very important to have your entry key set up on all of these metrics. And if you guys have any other questions, but I'm not seeing any discussion since the start of my live streaming time because I'm not seeing anyone joining the live stream on the website. So there isn't any questions. But if you guys want to get more exclusive signal out of me and also the other mentor, you can register yourself now and on track to become a profitable trader. Okay, before I those signal that I've given out, it seems that everything is still on track. It has reached its first profit target. Let us check on the all market. It has already even reached towards the third profit target. Okay, so it has been quite a good market on the oil market. It has been falling down and even reached the third profit target during my live stream times. So it's rarely happen. But if you guys do follow that signal, you guys could have been in a third profit target. And I even give out a larger profit target in my VIP channel signal on the oil market before the live streaming sessions. And I believe that it has already reached even the third price target, but I haven't checked it out, but I will be checking it out soon and I'll be notifying you guys if you guys have been the VIP member. Okay, so I'll be ending today's live streaming and I'll be passing on towards Jaden. So he will be continuing the live stream sessions after me. So if you guys have any other questions, you can directly let Jaden know. So I'll be ending today's live streaming. Thank you very much for you guys that have watched and follow our live streaming sessions. And the timing for the live streaming will be the same from Monday to Friday. So make sure that you guys always stay updated and follow us. And if you guys do get the benefits and you want to get more exclusive services, you can definitely register yourself and join us as a VIP member. Okay, I'll be seeing you guys tomorrow. See you.
So let's begin today's live sessions and let's talk about what we have been doing. If you still remember yesterday, we have been doing long positions on Euro USD on our live sessions. So here to our around that area. So why do we do long positions? We need to know that the market is going through liquidity to another liquidity. So the overall bias on the Euro USA is going on the higher time frame, going higher, and it's going to the external to the internal. Once the price has been verified this supporting line and the price has been verified this fair value gap, it's really don't have any reasons that will be going lower. So we have been doing long positions from here and getting 1 to 3 risk reward ratio. So it's about 1 to 3 risk reward ratio, and we'll be thinking that price will be continue going higher and higher as well. So overall, what we can see right now is that the price of Euro USD is definitely going higher and trying to reach through a certain area and going through continue going a longer way. Okay. Other than that, we also can see that the dollar, I mean the gold market. If you still remember, we actually have been saying that the gold market is going lower, or maybe we have been saying that it's yesterday is a really crucial on the gold market because we already mentioned that usually will be forming on the lowest maybe around Tuesday or maybe on Wednesday. The highest or the lowest forming lowest or highest will be usually on Tuesday or Wednesday. So we can see that the price has been reaching through, and then the price has been forming the lowest on Tuesday, and the price has been rapidly go through another high. So later on, I will be talking about what's my thought about on the gold market. Okay, gold market right now, I'm thinking it's going on the lower sides. So I will be talking about why I'm thinking that the price is going lower sides. Okay, you will be asking why you are keep looking through on the lower sides. But right now, I'm thinking that the price is going through the external range. So external range and going back to the internal range. So we are likely to see that the price of gold market will be going external to the internal right range and likely to go through back to this area. So this area, we are likely to see the price will be going back and will be reaching back to this area. So once the price has been reaching through this area, we are likely to see what is going on. The price will be reaching back to this supporting area. So once the price has been reaching through this supporting area, we are likely to see what is going on. It will be going back to this level. So because this is a 4 hour time frame, we'll be looking back to the 50-minute time frame. So once the 50-minute time frame has been grabbing back, going lower, and right now we can see that the price is going through a choppy move. So I'm likely to see that the price is going through a 50% area, maybe around this area. You can see that the price will be eventually reaching through some liquidations, grabbing some liquidity, maybe around here, here, here. But my thought is that this is the area that I'm looking for. This is my point of interest. So what is point of interest? Point of interest is once the price has been reaching through this area, I will be looking through what is really going on, and then after that I'll be trying to do short positions after that, because we can see that there's a lot of liquidity area. A lot of people might be thinking to do long, but we need to have some confirmations in maybe 1 minute. So if we do really see some confirmations in 1 minute, we are definitely doing shorts, and we can have a maybe around 1 to 2, 1 to 3 risk reward ratio should be right, and be also reaching back to maybe 2645 or even much more lower. So right now, I'm thinking that the price of gold market is definitely reaching lower, but we need to have some confirmations first. Okay, later on, I will be more focusing on the dollar index and telling you guys what's my thought about it. Dollar index, if you still remember, we have been saying that dollar index is going higher, but eventually it's going lower. I'm thinking that the price might be going back to a rebalancing, but right now, what we can see right now is that the price of gold market is likely to go lower. So I'll be talking much more details about it, but right now, let's go back to our charts and tell you about what is going on the fundamental sides. So what's really going on from the fundamental. Okay, so from the fundamental sides, we have some feedbacks. A lot of people have been saying that our PPT is a bit small, so we have been make it to a much more larger. So letting you guys know what is really going on from our PPT. Okay, so yesterday we do have some important news. One of the most important will be the US Consumer Confidence Index. So what it really means, a lot, as I already mentioned, a lot of people is focusing on the data, lower the expectation, but what does it really mean in the longer time frame? We need to have the context about it. Is it what is going weaker, what is really affected, and also one of the most important thing is how it really affecting on the financial markets. So from what we can see right now is that the US Consumer Confidence Index is dropping from 105.6 in August to 98.7 in September. Okay, this is the represents the largest monthly declining since August 2021, which reflecting on the consumer assessment of current business and labor market conditions. So actually this consumer confidence index is actually reflecting on the consumer uh, uh, what's their expectations on the business, is it going what's their expectations for the business in the futures, or maybe even the labor market. So right now the confidence is likely to go lower, so we can see that the business conditions and the labor market has been turned more negative. So this actually have been creating some fear of the markets. So we can see that the VIX indicator has been showing some kind of signs of going higher, and this has been greatly increasing on the gold market as well. So this is one of the major reasons that the gold market has been reaching through a certain new high and reaching through uh wait a moment. Okay, so right now we are expected that the price of gold market will be likely to continue going on the higher place because of this data, and the conditions is going weaker. And what is really apart from that, what is really going on. Okay, apart from that, we can also can see that the consumer is aging from 35 to 54, experience the steepest declining in confidence. So it's a really big gap. So 35 and 54 ages has been experiencing on the steepest declining in confidence. Despite that, the US labor market is remaining healthy, okay? And the FOMC has been also saying that the labor market is actually quite healthy, but I'm not really it's quite healthy. It's about 4.1%, but from what we can see from the first month, or maybe from the past few months, we can see that it actually is keep on increasing. So 3.9 to 4.4, 3.9 to 4%, and 4% to 4.1%, and also expectations to 4.1%. So there's actually some kind of fear will be declining that the market might be facing recessions or even more. Okay, the consumer sentiment weakening has been due to the concern about reducing working hours, slowing payroll growth, and also fewer job openings. Okay, so the mainly of the weakening is concern on reducing working hours, okay, and slower payroll growth and the fewer job openings. So from what we can see right now is that the economy situations is likely to go through a slowing down phase. So we can expectations that in the future the unemployment rate will be increasing. As we already mentioned that Federal Reserve or people has been focusing on from inflations to the employment sides. Okay, this is really important. A lot of people still focusing on inflations, not really that kind of important because Federal Reserve has been speaking has been saying stated that inflation's it's not a really big deal. It's likely to go back towards a lower it's likely to go back to the lower to 2% maybe in 2026. But right now, the main focusing is on the job, the employment changes, the unemployment rates, or even or other things as well. Okay, so the consumers as expecting a recession in the next 12 months is remaining low. So the recession's sentiments is actually remaining low as well. So we can't say uh, not not really a big issue to be honest from a shorter time frame, but we can expect that it when the news do really announcing that really create some kind of certainty issues. So you can see that one of the major thing is that the gold market has been going higher, the silver markets and other pairings as well, but it has been creating some pressure on risk assets. So you can see that the stock indexes has been slightly dropping down lower, the crude oil or even the cryptocurrency as well. Okay, so next, what we are be talking about next is the most importantly is slightly increasing those who are okay. So even though that the recession's momentum or sentiment is still low, but it's slightly increasing in those who believe that the economy is already in recessions. So this is not a really good thing. And other than that, plans for buying home and new cars purchasing is slightly improving. So it's a good thing. The spending power is continue raising. So the retail sales is also higher than expectations as well. So interesting in buying smartphone and laptop in the next 6 months has been eased, and buying plans for larger appliance will also mix. So for to summarize what is really going on from this data, even though that the confidence is lower, I think that the most important thing and one of the major reasons is that the Federal Reserve is increasing interest rates and it's already slowing down on the economic situations. So the confidence has been slightly going lower, but because of Federal Reserve has been cutting rates on 50 basis point, so we can expecting that the spending power or even the employment sides will be gradually forming some kind of support in the future. So I'm thinking that it's not a really big deal, and we can expect it that the stock indexes it's likely to continue going higher. So SP 500s or maybe SP 500s or Dow Jones or other things, it's likely to go on a higher phase. Okay, so let's talk about the charts. Okay, so what's your thoughts and so on. So from let's go back to the dollar index. Okay, so we need to have a bigger time frame expectations. So what is really going on? Okay, so let's look through the comment sections on the YouTube. Consumer confidence has been decreasing, which is not beneficial to the economic developments. Yes, it is. Is this news negative for the US dollar? Yes, because once the confidence is lower, people is speculate that the Federal Reserve will be cutting rates from 50 basis point to 75 basis point in 2024. So it's really likely to a negative momentum from the US dollar. The current gold price is looking for opportunity to break through admin shots. So yeah, judging from this, the results of tonight new home sales will not be too good. Yes, it is. It's likely to be. I'm thinking that it might be lower than expectations. There's a chances that it will be lower than expectations. But let's talk about the what's my thought from the dollar index. Okay, if you still remember, I'm actually thinking of doing long in the yesterday. So why? Because we can see that this is the manipulations, but from the bigger time frame, everything we need to be focusing on the bigger time frame. So from the bigger time frame, what we can see, even though that this is might be the manipulations, but this is actually a graph of liquidity. This is the 1 hour time frame of liquidity area. Once the price has been dropping down, grabbing back to the liquidity area as well, once the price has been reaching through this, it's likely to continue going lower and lower. And from here, what we can see, this is the external, okay, external to internal, and then this is to internal to back to the external. So right now, what we can experience is that the dollar index will be likely to reach higher to go back to the internal sites. So where do we think that the price is going through? It's likely to the fair value gap rebalancing that kind of supporting level. So I'm thinking that it's likely to go back to this level. Okay, from the 1 hour time frame, what we can see, the 1 hour time frame, the price is going through a bullish momentum. You can see that there's a lot of fair value gaps from here, and also here. And we didn't really see some kind of fair value gap on the uh, lower time frame. Maybe in 50 minutes we do really see, but we can see that it's actually going higher right here. So I'm thinking that the price of dollar index will be likely to reach back to this area because to the external range. So I mean external to internal. So internal will be likely go back to the external range. So this is really important and it's likely to maybe give some pressure on the gold market as well. So gold is actually reaching through some kind of liquidations. As we already mentioned, we are likely to see that the price might be reaching back to this area. So I won't be doing any shots right away. I need to see some context about it. And I'm thinking that later on will be have some news maybe in 9 or is it on 10 p.m.? Is it 10 p.m. online? Okay, it's on 10. Okay, so later on 10 p.m., it's likely to forming some kind of support from the dollar index, maybe giving the gold market reaching through this area, and then after that will be reaching on the lower side. So right now, I'm thinking that the price is going to the external. Okay, so you can see that this is the external range and going back to the internal. And once the internal will be going back, and then we are likely to see the price will be grabbing this liquidations. So once the price has been grabbing these liquidations, we are likely to see what the price will be dropping below and reaching back to the lower sides. So right now we actually will be waiting for the data maybe around 10 p.m. Once the data have been announced, it's likely to go through and we'll be continue to do shorts afterwards. Okay, we need to know that the higher time frame liquidity area is the most important thing. There is the data that has been releasing yet, so the market will be definitely not take the trend up in the market so quickly. Okay, it seems like it. Okay, so from what we can see, the dollar index has been reaching high and reaching through this area. So let's talk about much more details about it. Okay, so what is really the most important thing? Okay, so going back, we'll be cutting out everything and letting you guys know why I'm doing this analysis. Okay, so from the bigger time frame, from the weekly perspective, what we can see, this is the external and this is the internal. So once we can see that, we actually can use 4 hour time frame to see this is actually the wait, okay. Okay, so you can see that is actually forming on the external range, I mean internal to the external. Once the price has been reaching through the external range, the price grabbing liquidations and continue going lower. No matter you are using on the fundamental or maybe on the technical sides, it's likely to see a lower range from the dollar index. So the dollar index is actually going through on the lower sides. Okay. Okay, so we are likely to see that the price of dollar index will be going higher and then going lower. So from what we can see right now is the external range, internal range is it? Oh yeah, internal range to the external, and then once the external going back to the internal, then going lower. The most important thing using SMC or ICT method is the time frame they are using. Time frame is really important. You need to know what time frame it is. This is actually on the 1 hour time frame, so you can see that 1 hour time frame has been forming. Once this form, you can actually use 5 minutes to do trading opportunities. So for example, going back, going back, okay, going back, you can see that the price is going here and then reaching through this area and then continue going lower. So actually, the most important thing using ICT is the, it's what? It's the, the time frame they are using. So right now, we are expectation is that price of the gold dollar index will be likely to go higher, and this might be creating some kind of pressure on the gold market. So we are likely to see the price is reaching through here. So, but right now, we definitely need to see some going higher first and then going lower. So this is the most important thing. Okay, so going back, let's see how it turns out. Okay, okay, so let's see how it turns out. Price reaching through here. think let's just do another starting from the beginning. So hoping that you guys do really understand what I mean. Okay, so right here, what we can see, the price reaching here, this is the external range. So once the price has been reaching through the external range, we are likely to see what? We are likely to see the price going back to the internal. Okay, so from what we can see here, the price reaching, before reaching here, the price has been forming back to a what? A market maker sell model, grabbing back to these liquidations. So going back to the daily, let's see where is it. So it's probably on the daily time frame. So here is the area that we are focusing on, maybe here. Okay, so this is the daily time frame. Okay, so once the daily time frame has been formed, okay, you can see that the price has been forming through the internal range. Okay, will be going lower, but the price do really go back and then continue going lower. So from that, we'll be using 1 hour time frame. Okay, so 1 hour time frame, what we can see, the price has been from here grabbing liquidations, manipulations. This is actually a really good one, but we need to see the price to break through this area first. I mean this resistance area first. You can see that this is the area, is the most important thing. Once the price has been breaking through, or maybe disrespecting on the fair value gap, or you can see that the fair value gap disrespecting from this. Once the price has been disrespecting from this, we are likely to see the prices continue going lower. If you want to have much more higher probability, you can wait for the price to break through this. If you want to have a higher RRR, risk reward ratio, you can try to do shots from here, but you can see it's likely to range up. But we'll be waiting for the price to manipulate some places first. So for example, will be here. Okay, you can see that the price do really manipulations from this area. So here you can see that it's not really manipulate. So this is the manipulations. Once the price has been manipulated, we can see that the price going lower, and then this is the low risk, the best risk reward ratio that you can try to do. So you can see once the price has been dropping down 50%, so this is the 50% area. Usually we'll be trying to do shots higher than 50% because it's premium area. So once the price has been reaching through this area, what we can expectations is that the price is going lower. So going back, I probably will be doing shots from here to be honest, but you can see that the price do really going on the lower sides from here, from the 50%. So we'll be putting here as our point of interest. So once the point of interest has been forming, manipulations, grabbing this liquidity, and then giving a displacement, well, what we can do after that, you can see that the price will be giving us another entry level from here. So here you can see that we have another 50% area, so you can see the price has been reaching through on the fair value gap. Once the price has been grabbing this fair value gap, what we can expect, it's going through on the lower sides. So you can see that the price is going lower. So where is it going lower to? We'll be going through this liquidations, the internal sides. Once the internal sides has been grabbing, we'll be grabbing another liquidations and continue going on the lower sides. So you can see that it's actually to liquidity to another liquidity, and other than that, the price is going on the higher phase. So let's see on the gold market. So I'm thinking that the gold market is going lower, but the best thing I'm hoping for is that the price is reaching through this area and then going lower, because this is the discount area 50% above. So I'm likely to see and hoping to see that the price do really give us some kind of sign. But if not, I will be waiting for confirmations if the price do really forming some kind of impulse, or maybe some kind of strong downward momentum, then we will be trying to do shots. So to give you a heads up, if you do really wanted to join our live sessions, or wanted to join our signal group, please do please do follow us on our signal group, just press below. You can see that there's a free signals Telegram channel. You can join. There's a lot of signal, and our winning rate is really high. To be honest, it's really high. I think it's about 80% higher than 80%. So if you do really looking through, please, uh, please do follow us. Okay. So going back to the dollar index, so as we already mentioned, the price is going lower. Uh, the most important thing is using the right time frame, to be honest. So you can see that the price has been reaching through this and going back towards this area, and this is the last push, grabbing this liquidity. Okay, so you can see that this is the liquidity area that price has been reaching through. Once the price has been reaching through, okay, once the price has been reaching through, it's not really likely. Mostly, okay, from what my experience is, mostly that the price won't be breaking through here, and then the price usually won't be reaching through here, okay, because this is the area that the price has been grabbing liquidity. So you can see that the price has been reaching on the lower sides. So where is it expectations to go to? It's to the external. Okay, so once the price has been going back to the external, what we can expectations to the internal side. So you can see that is internal. Going back from here, you can see that the price do really respecting on the 50% range. So you can see that it's respecting on the 50%. So once the price has been respecting on, it's likely on this is the highest because this is the fair value gap reaching back and grabbing some kind of liquidations from here and then going back to the internal range. So from this, you also can see using on the 50%. So it's actually the most important thing is using the right time frame. If you are using the right time frame, you can gain a lot of gain a lot of uh, advantage from it. Okay, so you can see the price has been reaching through and grabbing on the lower sides. So because of that, expectations is that the price might be reaching through this area and then giving us a low, hoping for that. But if the price do really give us a strong impulse rate to continue going lower, then it's likely to give some kind of support to the gold market and reaching on the higher place. Okay, so this is actually you can try to do long. If I'm likely to do long, I'm probably just do long in here, putting my stop loss below 20 pips, getting 40 pips should be fine. But this is the area that we are looking for. Why? Because this is the fair value gap. If the price do really disrespecting on this fair value gap, then it's likely to continue going higher. Okay, so this is what is really going on from the dollar index. Okay, 1 hour time frame is really important, and we can see right now what is going on. Okay, so this is the internal to the external. So this is the area that I'm likely and also hoping for the price to reaching through. If not, then it's too bad. But I'm hoping for the price to really reach through here. But if we follow for our 1 hour time frame, we can see that the price, yeah, I'm likely to see this area, but let's see how it happens. Okay, going back to the 1 hour time frame, let's see the price do really reaching through here, disrespecting on this fair value gap, reaching lower, and let's see how it happens. So let's see on the gold market. Okay, so this is the area that we are focusing on. Let's see how the price going on. Okay, so let's see about some of the questions. Looking at the negative K line. Okay, if the dollar index continue to fall, gold will definitely reach true new high. Teacher, do you think the current gold can still brought into buy? As I already mentioned, I'm looking to do shorts to be honest, but I will be waiting some confirmation first. If that really happens, I think the risk reward ratio is probably it's a really good risk reward ratio. Okay, 60 has not completely broken yet. So I'm thinking is under observations. Looking at negative K line of the dollar index, Jaden is very professional and good at analyzing markets such as precious metals, oil, and various indexes. If you want to get more trading signals, you're welcome to join us. Yes, it is. 60 has been exceeded. I think you mean by pushing through, but okay. I'm going to continue trading gold. I'm already in. Okay, that's a really good to hear. Good things to hear about it. But this is the area that we're focusing on. Probably we'll be using 1 minute time frame. Not really liking it, but I'll be waiting for the 1 minute time frame to give us some kind of confirmations. If the price do really break through, I think it's likely to continue going higher, but I will be waiting for the price to disrespecting on this fair value gap first, giving us a strong impulse rate. And then I'll be doing shorts, definitely doing shorts, but you can see the price is struggling. Let's see on the dollar index. Dollar index has been continue going on the lower sides, as we already mentioned. We were planning that the price is going here, then continue going lower, but let's see how it turns out. Okay, okay, 50. I mean, this is daily time frame. Nope. 4 hour time frame. Nope. 1 hour time frame. I think using 4 hour time frame should be fine. So you can see this is the liquidity area that the price has been reaching through. Okay, okay. Once the price has been reaching through, where is it? We are focusing on is the 50 minutes. So 50 minutes. I was thinking that the price do really reach through here, but it seems like let's see how it turns out. Okay, let's see how it turns out and see what is really going on after that. But if we do really want to do shorts on the gold market, I think we need to wait for some confirmations. You can see the price do really struggle, but need to see some manipulation displacement first, and then I'll be trying to do shorts of afterwards. Okay. Okay. So let's see. So from what we can see right now is that the price has been reaching through this and grabbing liquid. It seems like the price is reaching through high. Maybe the dollar index it's going on the lower sides because it's breaking through on the lower. Maybe we'll be reaching back towards this area. But let's see how it happens first because this is the 4 hour time frame of liquidity. Is it 1 hour? So this is a tricky part. Hmm. Seems like the price of gold market is probably going higher, disrespecting on this. Yeah, seems like the price is disrespecting, grabbing liquidations. Maybe this is a market maker buy model. I was thinking that it might be here, but once the price do really ranging and breaking higher, maybe it's going higher. Okay, but let's see how it turns out because we will be seeing this. So 50% above. Okay, 50% above, reaching back, going here as our last move before down, auto block, reaching to this area. Let's see how it happens. So once the price do really reach to this area, we are likely to see a reversal. Let's do a top-down analysis about it. But let's try to look on the gold market. I mean the dollar index. Hmm, daily time frame. No, one time frame, 1 hour time frame. Think 4 hour time frame will be more suitable. 50 minutes, reaching through the 50 minutes, reaching through, grabbing this liquidity area. Yep, maybe grabbing this liquidations area and forming a market maker sell model reaching back below. So it's likely to reach lower right now. I was thinking that the price do really reach back to this level and then going lower. I was thinking that maybe giving here and then continue going on the lower sides, reaching back to this level. But if the price do really reaching back on the lower sides, I think it's possible the price will be breaking through this supporting level. So didn't expect that the internal range is so little, reaching back towards this area and grabbing this liquidity area and then continue going on the lower side. So in the 50-minute time frame, expectations is that the price will be reaching to lower and Euro USD or maybe or other parents like GBP USD will be continue on the higher phase. Okay, Euro USD, GBP USD. If you still remember, we have been already mentioned that we will be doing long on the stock indexes. So we can see that the stock indexes has been also reaching through the liquidations and continue going higher. Crude oil is actually on the higher sides as well. So let's see about the crude oil market. Okay, okay, so let me wait a second. Okay, so let's talk about the dollar index. So let's see the price reaching through the external to the internal. It's on the fair value gap on the 50 minutes. Is it 50 minutes? No. Yeah, I think it's 50 minutes. Okay, 50 minutes. Pretty true. Grabbing the positions, going on the lower sides. Yup. Go market. I was thinking that it will be reaching here as our resistant area, but let's see how it happens. So this is the area that we are actually waiting for, but I'm thinking that the price is going higher because the displacement has been continue going stronger, so it's likely to go on the higher phase. Okay, so let's talk about on the gold market. Okay, so gold market is actually really interesting. Okay, so as we will be doing a top-down analysis. So going back from the 4 hour time frame, okay, from the 4 hour time frame, we can see that this is the external and going back to the lower sides or going higher and going back to the 1 hour time frame, what we can see, this is Wednesday, Tuesday, and Monday. So Monday, what we can see is that the price has been manipulations from this area. So we can see this is the manipulation phase. Once the manipulation phase has been formed, price has been grabbing back to the liquidations and going back to what? The order block. So from what we can see from here to here, 50% will be right in here. So you can see that the price has been reaching through the discount area. So where is it going on? I'm thinking that it's about going back to the 50 minutes. Yep, the 50 minutes supporting level from here. So you can see that this is the area that we are likely to see is going through. Okay, and then 4 hour time frame reaching back. Yep, you can see that the price has been reaching through this liquidity area. Okay, this liquidation area, and once the price has been reaching through this liquidations area, going back from the 50-minute time frame, what we can see, the price has been going back to the area grabbing liquidations, and after that, once the price has been grabbing, going higher, rebalancing out, will be definitely continue going higher. So right now what we can see, I was thinking that this might be manipulations and going lower, but we can see that it's actually a choppy right. So this is the manipulations phase. Yeah, I think this is 1 hour time frame. 1 hour time frame manipulation phase, going back to the 1 hour time frame. So where is it we expected to? I'm actually expected that the price will be reaching through this area, to be honest. Maybe maybe reaching through this area from the supporting line because this is the fair value gap. But you can see that it didn't really reach through. The price do really reach through this this liquidity area. Once the price has been grabbing this liquidity area, we'll be using a 5 minute charts. So you can see that we need to see a strong impulse. So where is the strong impulse? You can say that it's here. You can try to say it's here because this is a fair value gap area and you can actually just do long in this area. Okay, you can just do long in this area and maybe you just put your stop loss below and grabbing above should be fine. It's okay, even though that the price has been drawn down a little bit below. But other than that, it's likely to continue on the higher phase. So you can see that the price has been forming some kind of supporting line because grabbing liquidations and continue going higher. But the most important thing is breaking through some kind of resistance area even though that this is the manipulation phase. So if the price do really break through this area, we are likely to see the price is continue going higher and reaching through this area. So we can see that we are expectation is that the price is likely to reach through this area. Okay, this area. So where do we do long positions on? I'm thinking that if the price do really reach back to this area, we'll be likely to do long because this is the fair value gap. So if the price will be reaching back here, we can actually just put our stop loss below 30 pips and get 1 to 6. We can actually just aiming from here. Okay, this area, this resistant area. Let's see how it happens. We have been changing, but let's see how it turns out. Okay, okay. Okay, so we are likely to see the price is going higher, but if the price do really reach through here, we'll be doing long positions. Putting our stop loss below this area should be fine. If you want, you can put 30 pips. I'm thinking that you can try to put 30 pips and we can get above here 40. 2 to 1 should be fine. So I'm thinking that the price is reaching through this area. So we'll be waiting for the price to give us some retracement. So where is it? Is it going on? Here, right, hopefully that the price will review through here. The most important thing is the right time frame. Yeah, the right time frame is the most important. 50 minutes range. It's 1 minute. Not really liking using 1 minute. Five, fine. Yeah, 5 minutes. Five. Hmm. Let's see how it turns out. Okay, we'll be waiting for the price to reach you here, and then we'll be doing long positions and getting our 70 pips. So let's try to do trades together. Going on the lower sides. Hopefully that the price is going lower sides and reaching through towards upwards. Okay, so let's see some of the comment section below. Okay, I originally wanted to drive it back to the around 55. We all ourselves still need to know how to seize some opportunities. Okay. Gold has risen again, and I now have an entry order near 57. Okay, that's a good thing. Thinking that it's likely to go through a manipulations reaching back to this area. If that really happens, we can try to do long, seize an opportunity, putting our stop loss below and getting 1 to 2, 1 to 3, or even here should be possible. Okay, so let's wait for the trading opportunities. So let's go back to our charts, our PPT. Okay, so we have been talking about US conditions because the US confidence has been dropping down from 105.6 to 98.7, the largest declining, and has been reflecting that the consumer confidence has been dropping and spending power will be weakening in the future. So this has been greatly putting pressure on the dollar index. Okay, so next we'll be talking about the Australian inflations. Australian inflation has been falling back from 3.5% to 2.7% in August. Okay, this is a big drop, but it's actually meeting their expectations. If you still remember, Australia has been saying that will be raising interest rates in the near future, actually, because on the inflation sides. But I'm thinking that because this has been the biggest drop, so I'm thinking Australia will be mainly maintaining their interest rate decisions and we'll be waiting for the inflations or maybe the employment size really reach through 2.2%. Only then will be considered to dropping interest rates. Okay, so from what we can see the data, which one is the biggest contributions? The housing has been raising 2.6%, food and non-alcoholic beverage has been raising 3.4%, the alcohol tobacco has been also raising by 6.6% were the largest contributions. So overall, I think that housing is one of the biggest reasons and alcoholics and tobacco. So You know, okay. Other than that, automotive fuel price were 7.6% down from August 2023, and while the electricity price has been doubled 17.9%, electricity price will continue going down. Okay, so the biggest contribution will be fuel and energy. Okay, so mainly because on the Commonwealth Energy Relief Fund rebates of the state government's rebates. So this is one of the biggest reasons why that the electricity has been doubled quite a lot. Okay, the softer than expectations inflation's figure could fuel speculations on Q4 2024 RBA rate cuts. So from that point onwards, we can expecting that the the Australia will be cutting rates in Q7, so this might be slightly to putting some pressure on the AUD pairings. So let's see about the AUD pairings, everyone. Okay, so let's see, is it going through? Nope, didn't reach through our entry level, so we'll be going back to the AUD USD pairings. Okay, so AUD USD pairings, we already mentioned that the price is definitely continue going higher and reaching through this area. So you can see this is the manipulations, displacement, rebalancing out. So it's likely to reaching back to this area. So once the price do really reach back to this liquidations, grabbing below liquidity area, you can see that the price do really grabbing below this liquidity continue going I mean the impulse rebalancing out, and then what we happens then continue going higher phase. So AUD USD is actually a really good pairing to trades, and even though we are our expectations is that the price might be going on the lower sides, but let's see how it happens. Okay, I'm thinking that the price is going on the I mean a rebalancing phase, to be honest, because the price has been reaching through a certain area of higher phase. So from here, expectation is that the price will be reaching at least 50%. Okay. So once the price has been reaching through this 50%, and then after that will be continue going higher phase. Okay, so this is our expectations and our thoughts about on the UD USD pairings. So the dollar index is likely to continue going lower and reaching through the lower sides. So this might be continue giving some kind of push above from the gold market. Okay, this is actually a good one. Maybe using 1 hour, 1 minute time frame, we can do much more. Above, rebalancing out. So some of the people have been asking crude oil, is it possible to buy? Let's do a top-down analysis on the crude oil market. Okay, so from what we can see, the price has been reaching through this area. So we are basically waiting for the price to reaching through some kind of rebalancing. So from here, the price has been reaching through this internal. So where do we expect it on? Will be this area. So you can see that the price has been reaching through this area and has been reflecting on. So it's likely to go lower, to be honest. I'm thinking that it's going lower and price has been forming some kind of pressure. So we'll be looking from here, going back from the 1 hour time frame, and let's see how it happens. So this is actually a good one. Manipulations, displacement, respecting on. Yeah, I'm thinking that we actually can just do shots. Yeah, yeah. This is actually a good one. Okay, closing out. Okay, closing out, closing out. Can just do shots, putting out here. Yeah, putting here. Maybe if you are more conservative, you can put here, but I'm thinking that we actually just can put here. and reaching back, and we'll be thinking that the price is likely to reach below this area. I think even much more lower, to be honest. Let's see, trade level. Is it shit? Nope. Let's see the price. Thinking that it's possible to go lower from here for having liquidations. Yep. Let's make it here. Okay. My positions are, I'm thinking to go lower to be honest, because crude oil, it seems like the price has been manipulations and displacement, so it's not really likely to go back here. So I'm thinking that the price at least will be reaching through this area, this liquidation area. If you wanted to, I'm thinking that you actually can try to make it here. Time frame, time frame to use. It's the most important thing. Okay, see how it happens. We do really have some fair value gap from here, but let's see how it happens. Uh, if do really go lower, we can actually expectations is here or maybe even here. Let's make it, yeah, let's make it here should be fine. Okay, so let's see how it turns out from the crude oil. Is it continue going higher, reaching through because of the dollar index, or is it going lower? Why I'm doing lower is because we can see that the price is going to the external to the internal range, and the price has been reflecting on and giving by 1 hour time frame, we can see that the price is going through this fair value gap area, this manipulations, displacement lower, and disrespecting on this fair value gap, to be honest. So I'm thinking that the price is going either is definitely going on the lower sides, to be honest. So I will be definitely just do shorts, yeah, just do shots and see how it turns out. Okay, so let's see how does the trade plan out tomorrow on. If the price do really keep reach our TB area, then that's a good thing. But this is actually a really good resistant area. You can try to use it as a resistance if you really wanted to. So let's see. Like thanks. Maybe reaching through the high. I'm not so sure. But see. Okay. Um Crude oil fell a lot today. It's almost finished now. I'm trying to open a crude oil buy with a live positions. If crude oil is going to rise, we have to wait. Yeah, yeah. Where does your crude oil come in? 70.49 is relatively low positions. Okay, let's see how it turns out. Okay, crude oil. See, is it going higher or going on the lower sides? Because this is the grab of liquidations. This is also bigger time frame. So I'm thinking that it's probably going on the lower sides, reaching back on the lower, maybe here or here as well. Actually, we can try to make it here if you wanted to, and just make it on the lower. Okay. Confirmations on the bigger time frame. Okay. So let's go back to our charts. Okay. So next we are trying, and also later on 10 p.m. the most important news is the US new home sales. So the US new home sales from the past we can see that it's actually going weaker on three hundred 34K, and I mean 634K, 619K, and 617K. And after that has been going higher as well. And from the forecast, we can see that it's actually there's a higher chance that will be higher than expectations. So we are likely to see what. So wait a moment. Okay. Mm-hmm. So wait a moment. Hmm. Okay. So let's see. Okay, so right now we are expectations that the data is higher than expectations. So if that really happens, what it really means is that the dollar index will be forming some kind of support. Okay, so the dollar index will be forming some kind of support. So let's see on the crude oil. The crude oil has been forming some kind of resistance, grabbing this liquidations. If I'm right, it's definitely maybe going lower because we can see that this is forming on the manipulations, and this is also another displacement. So we can actually just do shots and putting on the lower sides. Okay, so let's see dollar index, and let's see how it happens. Okay. Hmm. So we are expected that the price of. Hey, anyone who dares to open the positions will have to meet to eat. It is estimated that it will not be able to TP so quickly and will be take a while. It feels like there is a bit pressure on the top. Okay, everyone, it seems like continue doing long, but it seemed logical because the price is showing a really bullish in a short matter. But I'm thinking that it's really a good time to do shorts. If you really wanted to, you can just try to do shorts from here and then putting your stop loss above here and just grabbing on the lower sides from here. So the risk reward ratio is quite okay to be honest. So we can see this is the fair value gap, grabbing these liquidations. If you want to have more confirmations, to be honest, you will need to have some displacement lower and you can try to get more lower and reaching back towards this area. But I'm thinking that the price of crude oil is going lower, so let's see how it happens. Okay, and this is also a discount area. So it's actually a great way to do shorts. So you do shorts, I think we can actually just do shorts. And seems like the price is going on lower, choppy right, don't have any fair value gaps, and price has been going reaching the lower sides. So yeah, doing shorts is actually a great way to do. So let's see. See, we can expect that the price. Okay, so going back to our charts, okay, so going back to our last point of the day, the last point of the day, we are actually expectations. The currency strength index has been showing signs of what? Currently, the market sentiment is going through a bullish momentum, like AUD pairings, New Zealand pairings has been continue forming a bullish momentum and has been continue putting pressure on the USD pairings, JPY pairings, and also the CHF pairings as well. So right now, the risk assets has been continue forming some kind of supports and has been putting pressure on the three pairings, the USD, CHF, and also the JPY. Okay, so from that point onwards, we can expectations is that the risk assets will be continue forming supports and will be definitely putting pressure on the risk assets. So right now, it's definitely just doing long on the AUD USD it will be fine. The New Zealand USD will be fine, and also doing longs on the. I mean, just do long on the risk assets should be okay. Okay, going back, let's talk about from the cryptocurrency perspective. So let's see the cryptocurrency. Okay, the cryptocurrency we already mentioned the price is going a choppy ride. I'm waiting for the price to go lower first and then continue going higher. So you can see that there's a lot of liquidations and this is the equal low. I'm definitely waiting for the price to reach back to the equal low first and then I will be only that will be trying to do long positions. SP 500 should be also the same. Okay, we are definitely doing long. So from the 1 hour perspective, Wednesday, Tuesday, and Monday, so you can see that Tuesday might be the lowest of the week. So this is rebalancing and recapping on this impulse rates. So because of that, be using a 5 minute range to try to do long positions. I'm thinking we'll be using here as our area. I'm thinking that the price is continue going higher. Just do long on the risk assets. So what we have been mentioned yesterday, we have been mentioned that SP500 will be continue going higher, the cryptocurrency will be going higher, and other than that, cryptocurrency, SP500, cryptocurrencies, crude oil, we are actually planning to do long, to be honest, but because the price is to the internal range, so we just let's see how it turns out. Okay, crude oil, I'm thinking to do shorts. There's a possibility that the price do really reach back to this area, but this is a really strong one. If you wanted to, I think you can wait for some confirmations. Maybe you need to have a strong impulse. Then you can try to wait for some impulse. But right now is a really good risk reward ratio. We'll be waiting for the data, the 10 p.m. data, and let's see how it turns out. If they turn out giving us an impulse, then I'm thinking that it's a really good setup to do lower. If not, let's see how it happens. Okay. Dollar index, it's continue going lower, so this might be giving some kind of support for the gold market. I mean the crude oil. Okay, so this drop may be giving us some kind of pressure on crude oil. So yeah, let's see how it happens. Let's see how it happens and try to go lower. Okay, I'm thinking that the market is waiting from the 10 p.m. data. So let's see how it happens. If the data is really good from the dollar, then this might be putting pressure. If that not, this might be giving higher. But I'm thinking that the price is going lower because this is the daily fair value gap, and the price is on a longer time frame. It's going back to the external to the internal range, and then the internal range it's going on the lower sides. So from what we can see right now is that the price is going on the higher basis. Okay, so going back from the 1 hour time frame, okay, it seems like the price has been breaking through. So if that really happens, maybe we'll be going back to this area, but let's see how. If the price do really reach back to this area, then we might be screwed. Okay, but we have been putting here, so let's see how it happens. Okay, I'm thinking that the market is waiting for the data. So if that really happens, maybe giving higher. Dollar index going higher. Maybe if this is a manipulation, this is a really good one. But if not, let's see. It didn't really show some impulse, to be honest. Maybe reach back to this and then going lower. That's possible, but let's see how it turns out. Okay, the GPUSD. Let's talk about the Euro USD. Okay, The price of Euro USD has been reaching through this internal range, this range. So probably will be reaching on the lower sides to be honest. Yeah, it seems like the price is going on the lower sides. So from the 1 hour time frame, let's see, thinking that is yeah, it's possible that the price is going lower because the price has been grabbing these liquidations. Yeah, there's a chances that the price is continue going higher, to be honest, but we can see that the price has been grabbing these liquidations. So we are likely to see that the price might be reaching back to this rebalancing phase of the 50%. Maybe this is just a reference. So we can see that this is an area we can expectations that the price might be reaching on the lower sides, but we need to see the price to break through this supporting line first. Once the price has been breaking through this supporting line, we can expectations that the price is going on the lower sides. So we need to wait for the price to break through this supporting area. Okay, but let's see if that really happens. USD goes strong, crude oil might be going weaker. So if crude oil going weaker, then it's likely to go through this. Let's see. We have another 8 minutes left. 8 minutes left. So if you have any questions, please do ask on the comment sections below. If not, we'll be ending today live sessions. Okay. So we have another 8 minutes left. And let's see how does the market reacting on. Maybe giving some kind of support from bigger time frames. It's really important. But the Euro USD seems like going lower to be honest. Mm-hmm. To meet the dollar index. Let's see my previous. Hmm. See later on what is really going on. Okay, to summarize what we have been saying about today. Okay, so going back. So what has happened? So we will be doing a quick summary if you just join our live sessions. So as we can see that the the consumer sentiment, it's likely to go lower. I mean, because of the U.S. consumer confidence is lower, so the market is really putting on that the Federal Reserve will be continue putting interest rates lower and putting that the dollar index has been going on the lower sides. Okay, and the Australian inflation has been falling from 3.5% to 2.7%. The major largest contributions is from the housing, the food and non-alcoholic beverages, and also the alcohol and tobacco. Okay, other than that, fuel price, energy price has been dropping the most, but mainly because of the Commonwealth Energy Relief Fund rebates and state government rebates. So because of these expectations, people will be speculations that Q4 RBA will be having a rate cuts. Okay, so the new home sales our expectation is higher than expectations, so this will be likely to give dollar index some kind of support. And other than that, the currency trade index will be giving maybe AUD pairings, New Zealand pairings will be giving some kind of pressure. Euro pairings will be also pressure as well. So we can go back to our charts and see what is going on. The Euro USD, is it going on the lower sides? It's continue going higher. So let's see on the crude oil, is it continue going higher? Putting pressure, grabbing these liquidations. If the price do really going lower, this might be a really good trade. So we have been giving out a trade even though that the entry level is not that good, but let's see how it happens. Okay. Okay, so but overall, I'm thinking that the price is going lower this week. I mean, this week is actually on the lower sides. So we can see that the price grabbing liquidations going higher of the week. So I'm thinking that at least the price will be reaching through this level, to be honest. So this is the level that I'm thinking that price will be going lower. Even much more lower will be reaching to this area as well. Okay, so let's see if you have any questions to ask. Okay. Gold, the gold market just enter our long positions from here. Wow, we didn't look through this. If we do look through this, we actually just make our long positions and our speculations that the price will be going higher. So this is actually a good trading. Oh, you see, this is a really good one. So if we do really go through this, our speculation is that the price will be going here. So 1 to 2 should be fine. So uh, this is really, how to say, too bad to be honest. If we do really do our long positions from here, we can expect speculations that the price will be reaching through here, and is it might be going lower? I'm not so sure, but let's see that it's possible that the price is from here to here. Okay, wait for the EIA 2230. Yep, that's possible. Crude oil should be going lower, but let's see how it happens. Let's see how it happens. Is it a manipulations displacement, or maybe it's just a rebalancing phase? Let's see how it happens later on. Okay. Seems like continue going on. Oh, we didn't enter this trade is a little bit too bad. If we do really enter these positions, we can gain, I think, at least 700 TP area. So this is an area that we can try 30 points and we can get 700 area. Okay, too bad to be honest. If not, we can get 70 or even much more higher to 100, 1K. So let's see. So we have another 2 minutes left, and let's see how it turns out. Liquidity to another liquidity. This is really a good trade. I was planning to do long, but if do long, we do really gain some pips. Hey, we have another 1 minute left. If you have any questions, please do ask. If not, we'll be ending our live sessions in another 15 seconds. So let's see how does the price react. Think that it's likely to go higher, to be honest. So let's see. Yep, is it? Oh, it's really confusing, but I'm thinking it's going higher. How about the crude oil? Okay, it didn't really reflecting much, to be honest. It actually didn't reflecting much, to be honest. Dollar index going higher. Yeah, I think because the data is higher than expectations. Let's see the data. Yep, the data is higher than expectations. Because of that, the dollar index has been going higher. The and my This is actually another good place to do long, to be honest. We can just do a low risk trade from here to here and getting back to this 1 to 5 area. Okay, I think you can try to do long, to be honest. And to do long in here and putting your stop loss below that might be a little bit risky, to be honest, but I'm thinking that is actually a quite good trade. Let's see about the crude oil. It's not really that much. Okay, so that's all for today. So hopefully that you really do enjoy our live streaming. So if you do really interested on our signal group, please press the button below and you'll be directly joining our free signals. Thank you for joining and we'll be seeing you guys tomorrow.